Understanding stock trading technical patterns is an integral part of investing. If you are a new trader or want to learn more about technical patterns, this video is going to highlight and explain wedge chart patterns and how you may view them to better estimate the direction of a stock. Now, there is no guarantee with technical patterns as the stock market is unpredictable. Rather, this video is going to provide insight to best infer and make sense of a potential investment. A technical stock pattern is a movement created by a security's price on a chart identified by lines that connect current price to highs and lows. A wedge pattern is marked by two converging lines that shape a wedge triangle. Traders use wedge patterns to recognize potential reversals or continuations. How to identify or interpret wedge patterns. Now, there's two types of wedge patterns. A rising wedge usually signals a bearish downtrend when the rising wedge on an uptrend breaks below the lower support line for a new low. That usually implies a downtrend. The declining volume and continued tighter highs implies less demand for the bids. A falling wedge is a bullish reversal sign on an overall downtrend. If the price breaks above the downtrend high and adds a new high, that could be a bullish sign. Typically, in either wedge type, the stock has tighter highs and lows, declining volume, and it breaks below or above the trend lines. Now, wedge patterns can be broken into long-term or day trading depending on the charts used. You can look at wedge patterns in the minute charts, daily charts, weekly charts, monthly, and yearly charts. Now, how to find wedge patterns. Now, your first option is to draw trend lines on stock charts with an investment app or some sort of website. Your second option is to use stock screeners such as FinViz. Now, FinViz has a list of wedge patterns right on its homepage, or you can simply choose it in the stock screener. Here's a couple examples. This example with the stock ticker symbol PIT is an example of a rising wedge over 8 months. Now, looking at this could be an example of a bearish sign if it breaks below this support line. SUSB is another example in which the stock broke below the trend support line, indicating a bearish drop. Wendy's, WEN, is an example of a falling wedge where the price tightened up, then broke through the resistance trend line of the downtrend. This could be a bullish sign. Only time will tell if this is accurate, so it's best practice to follow a handful of these different wedges and see what these stocks do. So, some key takeaways. Rising wedges are watched for a bearish reversal. If the price drops, investors may sell or short these. Falling wedges can be seen as a bullish reversal if the price breaks the resistance trend line. Volume is also key towards the end of the wedge points as well, as investors are waiting to see what it does. Overall, understanding wedge patterns can be a major advantage in determining whether or not a stock reverses its course. This is not guaranteed, and investors should do their own research and understand that investing is risky. So thank you guys for watching this video. Don't forget to subscribe, and we'll see you guys next time.